Hello, everybody, and welcome to Power Players. We got the very beautiful, very wonderful, energetic, charismatic Peter Tuchman from the floor of the New York Stock Exchange. Peter, how are we doing today, and what is going on with these markets?
What's up there, Topstep Nation? You know what? Look, what goes up must come down, right? You know what? We should not be fearful of when markets do this. It's really, it's normal and it's healthy. Obviously, today's sell-off is in response to the CPI number, right? It came in a little bit hot. What does that mean? It's consumer price index, right? That means that the inflation number, it's the key target number that the Fed uses to really decide whether inflation is getting less or more. And unfortunately, and it's broken down into two separate parts. There's core inflation, which is energy and food, and then there's overall prices that people pay for things in general. And it's clear that, look, we were in a nice trajectory on the way down, inflation coming from 8 and change percentage down to 3.1%. They were hoping to get it down to the 2.9 level. That did not happen. That was what happened in 2023. Coming into 2024, in January and February, we've had a number of reports that were, look, it makes perfect sense that when you've got such an amazing look, the Federal Reserve has tools to bring in inflation. When they raise interest rates, they're pulling money out of the money supply, which is their goal is to curb inflation. They did an amazing job with that. The tools did work, right? But the fact is, we have to realize where we came from and where we are. We came from 8% and change down to 3. That's spectacular. And at the end of the day, markets and economies take a moment to stabilize at these different levels. You cannot just, when you lay out the tools of financial monetary policy, and you're able to really accomplish that. It's kind of like, think of it like a diet, right? You lose the first 30 pounds, right, by going on keto or paleo or whatever you do. But sometimes that last 5 pounds are just a bastard to lose, right? Same thing here. We've come in 5% out of the 8, which is majorly significant. But the last 1%, because our targeted goal is a 2% inflation, and that last 1% we're having trouble getting to, and it makes absolute perfect sense. We've got a major conflict going on in the Middle East and in Russia and Ukraine, and those are some major oil producing countries. We've got problems with terrorism in the Gulf of Hormuz and with the Suez Canal, where the boats come to deliver oil. So net, when people are fearful about the oil story and you've got geo-global conflicts going on, the price of oil will eventually rise. So that's one of the things that's kind of throwing a wrench in the story. So where are we now? The CPI number did not live up to the expectations that we had. And so the market is responding. At the end of the day, we were told originally, when things were just going down in a beautiful trajectory at the end of 2023, that we were going to have 7 interest rate cuts. This is after 18 consecutive interest rate raises to curb inflation, to take money out of the money supply. We accomplished that goal. We didn't get to 2%, but we got to 3.1. That's a significant place to be. Okay. But then once these couple of hot numbers came out in January and February, the Fed already pulled back from the idea that we're going to start cutting rates from 7 cuts to 3 in the last announcement that Jay Powell made a couple of weeks ago. He said he was not going to overreact to the hot numbers, PPI, CPI, that came out the last time, right? And he was going to stay on the trajectory that they were hoping with the 3 interest rate cuts and in 2024. Okay, we don't know the timeline, whether there's going to be a June one, an August one, and a September one, and one in December. Normally, historically, you don't cut rates or do anything monetary policy wise during the month of an election, right? It's just going to throw a wrench in the sauce there. So, however, with the number today coming out and the expectations around it, leading up to this meeting, leading up to the number that came in today, there's been a lot of dissent amongst federal. The Jay Powell is the head of the Federal Reserve. However, there are 12 other governors who are underneath him, and very often they have different opinions, hawkish or dovish, around monetary policy. And it turns out, leading into this meeting, that a number of them, you've got Kashkari and you've got Bostic yesterday coming out and saying that they don't believe that the economy at this point deserves to cut rates yet. We need to
Hmm.
stabilize at the levels we are at or see inflation notch down another percent to 2% before we start cutting rates. So, the market, what are markets to hate? They hate being given expectations and those expectations not being fulfilled. The market can virtually handle everything, right? One thing at a time. Often, when you've got two things happening at the same time, like some problems with the inflation numbers and a couple of wars going on in Europe and some banking issues and whatnot. When it's got multiple things like that, sometimes it just gets problematic. Okay, so where we're at now is these guys feel there's dissent amongst the ranks. A number of the other governors, not Jay Powell, but other governors like Bostic, Kashkari, another of the guys who are powerful. These are central bank governors who feel that the way the economy is and these hotter numbers, the market doesn't deserve to get cut yet. Okay. And that is disappointing the market. And that's why we are where we are today, right? I'm not your advisor. I'm here to forensically explain, break down why markets do what they do, right? So look, we just came into the we closed at record highs at the end of the quarter. The first quarter was spectacular. Literally week after week, day after day, we closed at record highs across the board. Nasdaq, S&P, and the Dow. Obviously, sometimes you hit up against some resistance, whether it's technical or economic data that changes the landscape of what's happening. And that's what's happening. April 1st was sort of where everything started to turn around, anticipation of this economic data, because we did see January and February have some numbers that were hotter than expected. That was confirmed today with the CPI number that came out, plus the core number that came out, that were disappointing relative to expectations. And that's why the market is selling off the way it is. It's not the end of the world. If you all are sitting around there thinking about your investment portfolios, things are now on sale. It's like your favorite leather jacket that goes on sale at Macy's around Christmas time. You don't get upset about it. You get excited and you rush to the store. Well, everybody should have a shopping list. When you start to see markets, think about it. The market has been so frothy lately, right? We're trading at record highs across the board. You know, you've got Nvidia trading at 900. You've got so many of these stocks that I'm sure a lot of your community have been dying to trade and dying to buy for their portfolio, that are so frothy and so expensive that they've been holding back on it. So that when markets do what the market is doing today, now we don't know if there's going to be a follow through. Sometimes these things are one day event. We'll see what happens. But at the end of the day, everyone should have a shopping list, right, of stocks that they like, the stories they like, products they like. You guys should be doing your fundamental analysis. You should be looking into the companies that you like, whether it's tech, whether it's consumer staples, whatever it may be, healthcare. There are a lot of sectors that are very attractive when markets come in 400, 500, 600 points. Everything is on sale today. So sit around, do your homework, right? This is the time you don't just watch the market go up and be disappointed that you can't buy anything because it's so expensive. Do some homework, look at the fundamentals, find companies so you like the people, the process, the product, and the story, and then just identify which ones are on sale and start buying those. Your first entry, and I'm not your advisor, but your first entry into a long term investment should be your smallest, so that in case this market continues to come off its highs, then you'll be able to, you have a little bit of powder in your pocket that you can I'm not talking about powder in your pocket, but talking about powder. I'm talking about powder in your pocket where you'll be able to average in for a longer term investment. From a trading perspective, right? You guys all know I've got Wall Street Global Trading Academy. We've got an academy teaching technical analysis and risk management. People who are on Topstep are learning to trade futures. And then you come to us at Wall Street Global to learn technical analysis, learn charting. If everybody's interested, at 1:30 Eastern Time, David Green, my coach, mentor, and friend and
Yep.
partner, is going to be on Topstep TV talking about coaching, talking about technical analysis and whatnot. One last thing I will also say is that next week, On the 17th, on Wednesday at 8 p.m. Eastern Time, David Green and I and our team are going to have a live free webinar on the 5 secrets of successful day trading, right? And it's live and it's free and it's 8 p.m. Go to wsgta.com. Go to my Instagram page. There's a link in. There's a link in my bio. You got to register to be in it. It's limited space. You are all welcome. Guaranteed one thing: if you spend an hour with me and David Green next Wednesday night, which is live and free, you will be a 50% better trader, getting the little gems that David Green and I are going to share with you next week. So look, everyone, don't get freaked out. There is a spike in the VIX. That's the fear index. Obviously, when markets come in 500-600 points, people do get scared, but look at it as an opportunity, not the freak out time where you're just going to go crazy. Find the stocks that you like that are now on sale, start chipping away at them. If you want to learn technical analysis, come to wsgta.com. Come to the webinar, hang out at 1:30, listen to Dave.
Yeah.
And that's all I got to say about that.
I do gotta thank you so much for the insight. I'll try to get 2 questions in here real quick. In the green
Yes.
room, you said you love them. You love when the markets are down 500 points. Why is that? Why do you love when that happens?
Well, look, from an investment point of view, things become more affordable. And so there is opportunity to buy things at a discount. It's just
Okay.
the bottom line. Right?
Okay.
Also, I love the volatility. I love to see what markets do. Look, markets don't just go up. And so it kind of just wakes up everybody. Everybody's been on this sort of irrational enthusiasm high of the fact that we've been trading at record highs for so long and the market is frothy. It's healthy for a market to pull back occasionally for whatever reason it may be, a geoglobal event, some economic data, because at the end of the day, markets need that to build a foundation for higher highs. If you pull back and you pull back to support, right, then the next tranche up is going to be a stronger one. And that's the bottom line. Historically, if you analyze markets, bull markets and bear markets, rallies and pullbacks, it's healthy across the board.
Perfect. I do have one more question. You were mentioning some of the geopolitical events in the Middle East and in Europe. Lots of uncertainty. I think we have the Strait of Hormuz. We have Russia, Ukraine, Israel, Palestine. We got Iran might be getting involved. A lot of stuff is going on in the Middle East, which can affect crude oil prices. From your experience on the floor, when do traders start looking at the price of crude and start, maybe having a little bit of sweat come down the brow? Is it $90? Is it 100, 110? When does that get on their radar?
You know what? It's and every one of these crises, it's a little bit differently. We've seen the price of oil go from negative $25 to $125 over the last 4 years. It is an incredibly volatile commodity. Why I have trouble talking about oil is because at the end of the day, when you've got a commodity that's controlled by 5 major players, right, who don't call me when they're going to do something, then it's one of those things where there's too many unknowns, right? So look,
Mm-hmm.
oil right here at $85, obviously it's trading up a little bit. I don't know what the levels are because it just, depending on the components of the crisis, every time it's a little bit different. You've got some of the largest oil producing countries in the world are participating in the crisis we're in at the moment. Iran, major oil producer. Russia, major oil producer. The Saudis, right? Then you've got the problem of terrorism and the fact that transporting the oil through the conflict zone at the moment is going to be problematic. That's going to increase the price just net by nature because the boats are going to have to go around the Cape of Good Hope, go around Africa to get to where they have to go. So you've got conflict on production and supply. You've got conflict on delivery. So I don't really know what number I could throw out to you that would be responsible for me to say to anybody
Mm-hmm.
where you should get your attention. It's just that there's enough going on that you should be paying attention at this point because the zone is hot and oil is on a rise and something's going to happen. I don't know what it is. And I don't know is a legitimate answer.
That's a great answer. Just like not taking a trade as a trade, not having an answer is also an answer. Peter Tuchman from Wall Street Global Trading Academy. Thank you so much. The fastest 15 minutes to get all of that market knowledge right in there. So, Chad, I hope you enjoyed that. And Peter Tuchman, I will say our chat here has gotten a lot of mileage out of your pocket powder joke. So that one's probably going to stick around for a while. But so good to have you. So good to have you. Enjoy the rest of your trading session. And I do believe we have one person who's walking around outside of the New York Stock Exchange. His name is Based NYC. So I think he wants to hang out with you some point in time. If we can get him some
Okay.
merch, maybe you guys can go say hi. But we'll work on it. We'll work on it.
You got a deal. It's good to be with you. I'll see you next month.
Hey, see you. Have a good one. Trade well, Peter.